Hello, everyone, and welcome to the Creative Real Estate Investing Group. And tonight I have some great guests. So let me tell you about those people you see on the screen. So if you're interested in investing in real estate in the US and you're not a resident or citizen, you'll know how hard it is to get financing. Lendai has the perfect solution for you. They specialize in providing funding for investors who purchase residential properties in the US and especially Canadians. So go Canada. Their cutting edge technology allows them to finance foreigners and keep them competitive. Lendai is a fintech portfolio lender and utilizing their proprietary triple digital underwriting system to overcome the current information gap in the global financial services market. This enables them to approve and issue a mortgage on a US investment property held by a foreign investor with a fraction of the cost and time needed by traditional underwriting processes. So tonight we have, I'm going to do my best with your names, I'm sorry. Yair Benyamini, CEO. So Perfect. All the way from beautiful, I think Miami, if I heard correctly. Exactly. So that's amazing. So Yair is an entrepreneur with proven experience in corporate and commercial law, business operations, and marketing. In the past, Yair worked as a lawyer in the commercial and international law department of one of Israel's leading law firms. In addition, he established and led the biz development department of the law firm. Yair has more than 10 years experience leading large-scale operations in various industries and organizations. Yair is on the board of directors of several nonprofit organizations in the social and educational fields. Welcome. And next is Michal Liviatan. I love your last name. It sounds really cool. So an autodidact restaurateur. Wow, I didn't know. Entrepreneur who lives inside the customer service line. Wow, okay, that's amazing. With 15 plus years of experience in the food industry, Michal has demonstrated strong operational management, team leading, and profitability. And the food service industry is quite a rough business. So if you've survived, you're tough. So as a Canadian investor in Canada, Michal gained her knowledge and experience in real estate. The Canadian bubble made her look to the south of the border as well. And at the same time, COVID affected her, affected the food and drink world. So let's drink to that. Where she decided to focus on investing in real estate. Growing within the changes of COVID-19, Michal joined Lendai and the fintech world, focusing on the financial real estate sector. So welcome, wow, some amazing guests. So really excited to have you on, guys. And yeah, you can be here.
Okay.
Thank you very much, Francois, and it's really a pleasure being here and being hosted on this. I've heard that we should bring wine. Next time I will bring wine and not coffee. Next time.
Israel has some great wines too, so next time you have to bring some from Israel or tell me about some great wines. Or Florida too, I heard there's some interesting Florida wines. So
There is. In both places there's great wines, I have to say. So we have something to talk about at the next meeting. So again, thank you for hosting us. And we're looking forward to share a bit of our knowledge on the market and the opportunities that lies to there. In this market, even though things have shifted a lot in the last 2 years since COVID started, there are still a lot of opportunities if you know how to find them and if you know how to read the data correctly. And of course, when you're utilizing the right financing and the right structures, you can even benefit it your way much better.
And a lot of people, our listeners, I'm going to add your presentation now, but a lot of people attending tonight are wondering, I'm Canadian, I have no US credit, I can't bring any money, like I can't leverage, I have to bring all cash, which makes it hard. So that's why when I heard about what you guys do, I'm like, this is crazy. Everybody needs to know about it. So I'll let you continue there.
Yeah, so actually our goal is to make US financing approachable and easy to use as if it was in your origin country, or actually even faster and easier than that. And to do that, we build a system that allows us to underwrite the properties in the US, to underwrite the foreign investors in their origin country. So we know how to look on the property in Georgia, but also the foreign investor in Australia, in Canada, in the UK or Israel or any other place, and combine with our AI algorithms all this data into one decision-making machine that allows us to underwrite and give a final, a fast approval to every loan. And then the entire process, again, is a fully online process within our system. And our goal is always to help foreign nationals get financing on the US properties in a simple, fast, and efficient way. Simple because, as we said, everything is fully online. Fast because we streamline the entire process. And efficient because being a fully digital lender, it allows us to do many things in a much more faster way. But not just that, we can give much better prices and offering to our borrowers.
So and I really like your platform is great. You can tell it's high tech, like you can upload your documents securely, which I love, because when you're working across borders, you need to email your passport. I mean, that's a big no-no. And then financial documents and things. So I feel really safe when, like, Michal showed me how it works and you just upload and it's secured. It's amazing. So
yeah, when you're doing business worldwide, you need to share a lot of your information, your bank statement, your properties in the US, your financials, and nobody want to do it over an email. So this is why we built a very robust platform to make sure that everything is secured, and we basically guard your information as if it was ours. So yes, we spend a lot of time building it exactly for those reasons. So you won't need to send something over fax or over email, and then you will never know where it got. Yeah, so I agree with this. So I think that the audience, with no further ado, will dive deeper into what we're going to discuss tonight. And there are two things that I want to discuss tonight. So first of all, I want to start from a high level, speaking a bit about the US real estate market, within it, the US mortgage market. Then we'll discuss a bit about the opportunities and why it's a good tool to invest in the US, and also use leveraging in the US for your US investment properties. And we'll take some notes about how we saw investors coming from overseas, what they need to look out for, where are the opportunities, and really try to educate from our experience what is the best way to do business in the US with US financing, even though you don't have any social security number or US residency. So the first slide that I want to discuss, and before we discuss on the US mortgage market, we need to discuss the US residential market, because it's the same word. So the graph that you see here on the screen is the last 30-year pricing of average sales price of household in the US. So you can see that there is a huge increase of house prices during the last 30 years, like many other markets. But if you look on the right side of the screen, you can see 2020, basically COVID and up, there is a increase which is unlike any other during the last 30 years. And
straight up.
Yeah, it's almost vertical. And there are four reasons why we see this increase since COVID-19 started. The first reason is actually doesn't even relate to COVID. Due to the 2008 crisis, the subprime crisis, there was a major lack of financing for new properties being built. So since 2008, almost until 2016, they were not building enough new homes in the US to facilitate more families joining into the market, immigrants coming into the US. So the supply of new homes all over the US was very limited, and it still is limited in many places. And you know, like how economics works, supply and demand, there was lack of supply and the demand will stay high because new people coming into the market, and this is pushing the prices up all the time. On top of that, not just the regular supply and demand problems, when COVID hits, it created three different effects that affected directly on the residential market. The first one was the move from the cities into the suburbs. Many people understand that living in New York when the city is closed doesn't make no sense. So everybody wants to move into Florida, for example, or even to the suburbs to get a larger home, to get a pool maybe, because I'm working from home, I'm stuck at home, so I want to get a larger home. So this has created a very high demand for single family rentals all over the US, because millions of people went out from the cities looking for residential properties in the suburbs. So again, more demand, the supply low, getting it higher. On top of that, I'm sure you read the news, the federal government poured a lot of money into the citizens. I think it was the same in Canada, and it was the same actually in many other places. So people were sitting at home. They couldn't go to vacations because everything was closed. But suddenly they got a check every week or every month in the mail So they had more money to spend, but they had nothing to spend on. So once you have free money, you start to think, where do I need to put this money? And the first place you're going to do it is in the real estate market. On top of that, the banks in the US decreased the interest rates, which we'll elaborate in a second, which means that the money to borrow money become cheaper. So you have more money in your pocket. You want to live outside of the city, and taking money from the bank is at an all-time low. So it's the cheapest it's ever been. So more people took money and started buying more and more homes. And all those reasons simply push the market up and up in a very, as you can see, almost a vertical way. And the second graph that I want to show is just as we discussed a second ago. You can see that the interest rates have went down through the last 30 years. But again, since COVID started, it dropped even more and more. So in the last few months, it's going up, but very slightly. We're talking maybe it will go up higher during 2022. But as of today, it still haven't been gone up rapidly yet. And the really interesting thing is when you put those two graphs together and you try to understand what is actually happening here in the market.
So, yeah, just before we continue, we have a question from one of our Facebook users. So what is the platform address? So again, for somebody who missed out, Lendai, how do you find you guys online, lendai.com or?
It's lendai.us.
Okay.
Yeah.
Perfect.
But the way to reach Lendai is through our partner network. So people like yourself, we work as a B2B2C type of business, and you can read it. We will discuss it later. But the best way to reach us is through the landing pages and the partnerships that we have in Canada, in the US, Australia, Europe, and other places around the world. And we'll discuss it later. So what I want to emphasize on this slide is what happens when you're looking on the data in the right way and you understand the opportunities in the market. So what you see here, the blue line is, as we discussed before, it's the house prices, and the green one is the mortgage rates. And the interesting thing is the delta between them, which is today, as you can see, the highest prices is high as it's ever been, and the prices of the mortgages is its lowest it's ever been. So the delta creates a unique situation in the market that if I was lucky to buy a property in the last decade or so in the US, and I was a foreign national, so I probably bought it all cash, or even if I was buying it with some kind of financing, a hard money lender or something, I have a lot of equity that was now created between those walls because the prices went up. But the equity is stuck between the walls. And if I will sell the property to get this equity out, first of all, I lose a good property that is a cash flowing property. And second of all, I will need to pay taxes. But what happens now with the mortgage rates, that it's the lowest it's ever been. So taking this equity out now, it's very cheap. And I'm paying, I can tell you that mortgages that we did prior to COVID, 2 years ago, we gave mortgages to foreign nationals in 7% interest rate. And it was amazing for foreign nationals to get mortgages in 7%. Today we give in the low fours. The market changed, 3% over. Just to give you an example, the change in the mortgage just with Lendai, the 3% change in the last 2 years. If you're taking a mortgage of $500,000 on a 30-year mortgage, it's a $330,000 less payments on the same mortgage.
Wow!
This is change it's created. Just to give you numbers to understand those changes on an average property, $1 million mortgage. So basically, those numbers and this delta, it's not something that Yair was the only one that understands this. If you're looking at the U.S. mortgage market, the average mortgage amount on a regular year, let's say 2019, was $2 trillion. In 2020, when the year COVID started, it went to $3.9 trillion of mortgages, because many people understood what I'm showing you here. If I already have a mortgage, I need to refinance it, and replace it with a cheaper one. Or if I haven't done any mortgages up until now it's the best time to cash out on my properties and take a mortgage for 30 years fixed, and we'll talk about it in a second, and the best prices I can get anywhere in the world. Any questions here?
Yeah, we're getting at, well, first of all, let's go back to the previous comments. A little bit of love for Lendai from Mike Nicholson, Mike and Leanne. Yay, 4 videos. Wow, congrats. So
thank you, Mike and Leanne. Thank you for joining us.
So fellow Canadians investing in the US, taking action and taking advantage of Lendai's awesome service and programs. The next one, I'm sure we'll come to this, Yair and Michal, but what is the current mortgage rate right now? So you mentioned 7%. What are we looking at now?
7% was pre-COVID. The mortgages that we gave pre-COVID. Now we're in the low 4s.
Perfect. So that's exciting. Much better. You get free properties, like you said, 330,000 less. That's basically another free house or two, depending, or three.
Actually, yeah, depending on the market. If you're buying in Florida or in Wisconsin. Yeah. So this is the first thing that I want our viewers to take from this lecture. Understand the market trends, understand what's happening in the market, and take advantage of this to your advantage. And use other people's money to make more money for yourself, which is what we all like to do. The next thing that I want to discuss is, and I'm sure that many of our viewers know it, but I will just touch it in points, because sometimes people coming from different countries don't really understand the wording and different types of products in the US. So in general, there are 4 types of products, as we call them, within our platform. So the first product is a pre-approval. If you want to buy a property in the US and you're contacting your realtor, you want to get a pre-approval to show you have enough cash to put a legitimate offer. So we built a process that allows you to get pre-approval letter within minutes. Actually, you can get pre-qualified. It takes you between 2 to 3 minutes to get pre-qualified. And if you want to be fully pre-approved, it's a process that takes you you need to upload a few documents. It takes you a few minutes to upload the relevant documents. And then within 12 to 24 hours, you get pre-approved. You have a letter. You can show your realtor exactly how much buying power you have, so you can start the process. And this is where we always recommend people to start the process when they start looking for their first use property. Once you have the pre-approval, once you're finding the first property or the portfolio of properties that you want to buy, the next phase is doing a new purchase loan. So you can leverage the properties in the US, and instead of bringing 100% cash, you can get 70% mortgage on your US properties, and all you need to bring is 30% cash. The next type of mortgage is the cash out refinance or the regular refinance, which is basically, as we discussed before, if you already own a property, which is free and clear, for example, because you didn't took any mortgage when you bought it 3 years ago, and now you have a lot of equity between those walls, you can extract this capital that is stuck between the walls with a cash out refinance. So we're putting a lien, a mortgage on the property, and we're extracting the capital according to current value of the property. So let's say you bought a property in Atlanta in $200,000 a few years ago, and now it's worth $300,000. You can get almost all the equity, sometimes all the equity that you invested in the property, get it out, so you can reinvest it in the market over and over again. And portfolio finance, it's basically the same product, but for multiple properties. It could be 2, it could be 10 properties, it could be more than that. So it's one loan backed by multiple properties. If you own 3, 4 properties in, I don't know, in Michigan, and you want to take one mortgage, one loan process to extract all the capital you can, so you do a portfolio financing, and this is the best product for you. Actually, the majority of our loans today are portfolio financing for cash out, people that bought those properties in the past and now are cashing out so they can reinvest in the market. Questions here?
No, that sounds very exciting.
So the next slide that I want to discuss is the benefits of leveraging US investments, specifically with US financing. And this is actually, in many of the things are relevant to any financing of real estate worldwide, and some of it are specifically relevant to the US. So the first thing, which is of course easy to understand, you can double or sometimes even triple your buying power with mortgages, because you're using other people's money to finance the investment property that you're buying. So instead of buying a $100,000 home, you can buy a $300,000 home or 3 $100,000 homes with the same equity that you started at the first, which is very easy and simple to understand. The second thing, and I will elaborate with a specific example later, is that using the right financing for your investment properties in the US can actually create a higher cash on cash return. So the return on every dollar you spend in the deal is actually higher than if you would do it with other financing. In general, just to understand when a financing is good financing to make a higher cash on cash return, as long as the mortgage payment, the interest rate, is lower than the IRR on the property, you will get a higher cash on cash return. Just a rule of thumb, and we'll discuss it later, of course. Another thing which is very important, Sometimes we saw people that thinking, no, I don't want to get a mortgage because somebody else put a lien on my property, so it's make my investments riskier because he can take my property. But when I'm looking on it, I'm looking at it otherwise. Think that you have $100,000, as we said before. You can buy one property, put all your eggs in one basket, and if something happened to this property, you lost your income. But if you take the same $100,000 and you take 370% LTV, loan to purchase mortgages, so you have $30,000, but in three different properties. So if something happened, the tenant doesn't pay, a hurricane came and took the house, you still have two other properties that are keeping the cash flow and getting appreciation. You can buy them in different neighborhoods. So if one neighborhood goes down, the other might go up. So it's diversified your investment portfolio. So it's right, there is a mortgage on the property, and there's someone else that can take the property if you won't pay the mortgage. But from the other side, it can diversify your risk and lower it dramatically.
Yeah, it creates more resilience and multiple streams of income. We always talk about that in my courses. I always drill it down to my students. You need several streams of income. So even within a portfolio, having more than one door makes you more resilient. Just like you said, neighborhoods, economies. You never know, like a place burns down, who knows? Yes, you have insurance, but it's still nice to have assets that go on. So
exactly. The next point is specifically very important for foreign investors, because a lot of the foreign investors, and specifically during COVID, people are buying those properties in the US remote. They don't even go to see them. They trust their boots on the ground to find the property, and they buy with those. Sometimes they just saw some pictures online of the properties. And of course, there is an Excel, and you can put the amazing numbers in the Excel, and you can buy whatever you want. But then you're depending on yourself. Once you're bringing a lender into the process, and it doesn't have to be Lendai, every lender who is a smart lender, basically what we do on the property, we're doing a double check and a due diligence on the deal, because we're checking the property value, we're checking the property cash flow, we're checking the property situation, we're making sure that the property can really maintain the returns of the loan. So if we don't want to finance the property, it's a red flag around this investment. Maybe something is wrong here. I need to double check. And I can tell you horror stories on things that we saw.
Do you have one to share? I love horror stories. I'm sorry, I have a bit of a
yeah.
fetish
So
there.
I have multiple, but the one that I was amazed when we did a cash out refinance loan on 4 properties in the portfolio in Atlanta, Georgia. It was a seasoned investor. He had like 10 properties, and all the properties were rented. Everything was paid on time. Everything was perfect. But when we sent our appraisal into the properties, I can still remember the wording, because our underwriters brought me the report or sent me through in the system, and it was stating like that: the kitchen floor is sinking into the basement, but I couldn't get into the basement because it was so filled with mold that it was too risky to go in.
You would die from going in the basement. I love it.
And this was a property that I don't know how somebody's actually living there and paying $1,200 every month for a property where the kitchen floor is sinking into the basement and the basement is filled with mold. And the foreign investor, in this case, he was from Europe. He didn't even know that, because his property management said, hey, everything is fine. The tenant is paying every month. But what would happen if this tenant decided to move? Then he's expecting $20,000, $30,000 repairs that he didn't even foresee, because nobody looked at the property.
Oh my goodness.
Yeah, so that was the worst one I ever saw. But we've seen many times, problems with the title, problems with the insurance, people thinking that the property is insured, but actually the insurance doesn't really cover them because it's not on the right name, it's not the right type of insurance. So when we're doing the due diligence, we're making sure that everything is aligned. So the property is secured, the deal is secured, and we are secured. Because we and the investor, we have the same interest. We want the property to work well and finance the investment. So, sorry, this is a very important point, and specifically to whoever is working remotely and basically investing cross borders.
Yeah, and that's huge. I mean, because you can fall into traps. You don't know the area. Is this a flood zone? It's a different country, also different ways of doing things, different building codes as well. That's something I found out. the building codes are very different, especially like Florida. There's no basements. In Canada, everything has a basement and foundations at least 6 foot deep or like stone or something. But usually
Right.
there's some sort of foundation, and that's something to learn as well, like what to look for when buying a place.
Exactly. And it's not just that people are trying to rip you off. Sometimes it's general, we saw sometimes somebody said, okay, he needs to upload his insurance policy. So he sent us his insurance policy. And our processor said, hey, this is the insurance offer, but you didn't sign on it. So he just forgot to sign. So for a year and a half, he didn't have insurance. So
Oh my
nobody
goodness.
ripped him off. It was just a mistake. So knock on wood, nothing happened and everything was okay. But if something would happen, he didn't have an insurance for a year and a half on his property. And we found out during the underwriting. So it's not always bad people. It's sometimes just mistakes that happens in the market. So this is a very important point. Additional point is, yes, Michal.
No, sorry. I just wanted to touch a little bit regarding the due diligence and how it's related to our customer service and B2B, but we're going to wait and hold on that. Going to let you finish the presentation, and I'm just going to ask Francois if we have if we can extend a little bit, or we.
Oh yeah, we can go on all night. I have my wine. I'm good. So sorry, everybody.
You're all set. Okay, so let's finish with Yair's educational and part and presentation, and then I want to touch a few things. I'm going to put a note to self.
Yeah. So the next point that I want to touch is regarding taxes. And I'm not giving you any tax advices, but I do want to educate you about the tax opportunities in real estate in the US. And if you're doing it correctly, you can pay very little taxes, if any. So first of all, you're talking about the loan, and there's a lot of costs around the loan. You need to pay the appraisal, the title, sometimes there's taxes, origination fees, points, all kinds of costs. You say, okay, it cost me a lot of money. Because if you're doing $1 million loan, it can add to a few tens of thousands of dollars. But actually, and this is the interesting part, all the loan costs, the property, the appraisal and the title and the origination fee, and even the interest rate that you're paying during the loan, all of those costs are deductible expenses in the US against your income. So if you're billing it correctly, it's not actually cost because it's deductible against your incomes in the US, which is an amazing tool to use, and you can almost not pay any tax at all. Another thing that is related to tax, and specifically to cash out refinance deals, and I touched it before. So if you have a lot of equity stuck between the walls because your property was appreciated during the years, and you want to use this equity and say, okay, I want to feel this equity in my hand, I need to sell the property. But then you're losing a cash flowing property that is well maintained, working for you for many years. And on top of that, once you sell it, you need to pay capital gain tax, and nobody want to pay taxes. So when you're doing cash out refinance, it's not a taxable transaction. It's actually just another loan that you're taking. So it's a liability as far as the tax authorities. So it's not that you're not paying capital gain tax. As we said before, you even get tax deductions on all the costs around the loan. And those two things can bring, let's take a property that you bought in $200,000 in Florida for a few years ago. Now it's probably worth around $500,000. Take 25% capital gain tax, $75,000. It's a lot of money.
That's a down payment or a cheap property in Michigan, or with Lendai, possibly 2 or 3 properties if you use that money. So makes a big difference. If you're able to cash out and keep buying, it's the way to go.
Exactly. And 2 other things that one of them is very relevant in the market today. Everybody knows that prices are going up, inflation is going up all over the world. And there is one product which is an amazing advantage in the US, and this is the mortgage that Lendai is issuing. It's called a 30-year fixed mortgage, which means that the payment that you pay in the first day, it's the same payment and the same interest rate you will pay 30 years later. And specifically today, when the mortgage rate, as we said, is now all-time low. So let's say you took a $100,000 mortgage on a $200,000 house, just for the sake of the example. So you're paying $500 a month. But because of inflation, everything is going up. The rent is going up. The salaries are going up. All the grocery stores products are going up. The only thing that stays the same is your mortgage payment, because it's a fixed payment for the next 30 years. So actually, in real life, you're actually paying less and less as time goes by with inflation, because all other prices goes up, but the mortgage payment stayed the same for the next 30 years. So mortgages on real estate in general, it's the perfect solution to against inflation. Mortgages in the US, 30-year fixed mortgages is even a better tool to protect yourself against inflation.
Yeah, it's amazing because in Canada, every 5 years, the rates change. You're renewing, and who knows what it will be. So that's a great tool, a great factor for investing in the US.
Yeah, and this is a product that is unique to the US. We work with Australians, Brits, Israelis, all over the world. The only place we saw this product, 30-year fixed mortgage, is in the US. It's a US it's a US invention, and it's a very, very strong tool for investors because it gives you visibility. You know how much you're going to pay on your mortgage for the next 10 or 20 or 30 years. So you know exactly how much is going to stay at the end of the day. And the last thing, which is also very relevant for Canadians, is the currency risk exchange. And Michal, as a Canadian, maybe I'll let you elaborate on this and with a small example on that. Oh, sorry.
Sure. Okay.
So yeah, 30-year fixed sounds insane, especially for Canada right now. They're talking about increasing mortgage rates. So if you could lock it in and ride it and let inflation do its work, but you protect your investment, that's amazing. So yeah, Michal, please go ahead.
The sooner you lock it, the better. So right here in that slide, we can see how we can basically see the cash versus financing. We know that many Canadians are taking their HELOC on their Canadian primary residency and buy all cash. And so when you buy all cash, you're basically exposing all your Canadian dollar to the exchange rate, and by financing, putting the 30% down payment, you're minimizing that exposure, and you getting from Lendai a US dollars financing, right? So we're seeing here, I mean, it's pretty straightforward. 400,000 US dollars would be 120,000 in the down payment, right? And then in Canadian, 520, and now you need to put 30% of it, 156. So minimizing the exposure and essentially minimizing your risk, right? Do we have more slides?
I would even add, so remember that the property that you buy in the US, the tenant is paying in US dollars. So once you get a loan in US dollars, the tenant pays in US dollars, everything stays on this side, and you don't have to pay twice for when you're doing the exchange when you're coming from Canada to the US. And if something went wrong with the property, everything stays in US dollars. It's minimize the risk. Some markets that are the Canadian dollar is always changing in front of the US dollar. We've seen it with the Australian dollar. It's crazy how much it goes up and down, and it's pretty much take your risk 70% lowering your risk because you're taking 70% of the deal in the US. So that's a very important thing to know.
And you must know, Francois, as a seasoned investor, right? At some point, it was the Canadian dollar and the US were par.
Yeah, or even when I was a kid, it was the opposite. The Canadian dollar was worth more than the US.
Yeah.
The dollar 105, not much more, but a little bit more for a few years. So that's like a long time ago, before you were born. But anyway, we have an interesting question. So investment in the US is possible for any foreign citizens other than Canadians, especially in Canada. As you know, Michal, it's very diversified. We have a lot of permanent residents, and I think that might be where this question is coming from. Do you guys work with permanent residents but not Canadian citizens?
Yes. So Michal, you want to answer?
Yeah, I do actually. I just want so what we're doing is a DSCR based loan. We're looking at the property, but we're also going to verify the borrower. We're going to look at some documents, and that's going to be the Canadian documents. So basically, we are welcoming permanent residents and I'm actually a permanent resident myself. As long as you have the history, you have enough history in that country, in Canada, a good credit scoring, and your financials are well established here, then that's perfectly fine.
Yeah, and just as we said, we're not financing just Canadians. We're financing Australians, Brits, Europeans, Israelis, and many more. As Michal said, we need to see our system needs to see some kind of verifications on who you are in your origin country, not just in the U.S. side. Our algorithms knows how to underwrite the U.S. side and the origin country, but we need some verification. So if you just fresh off the boat, come yesterday, never work in Canada a day in your life,
Hard.
it will be hard. But if you're there for 5 years working in a high-tech company, you have a salary, you have everything, it will be easy. We're doing a lot of mortgages actually also in the US for people doing relocation into the US. So we have a lot of high-tech employees coming to work for Apple, for Intel. They have W-2s in the US, but they have no SSN. They have no credit scoring in the US. But those are amazing people. Those are people that making high salaries in the US. So we help them and we finance their investment properties in the US because other lenders in the US, even though they Google employees working and living in Silicon Valley, we just closed one a few days ago, a Silicon Valley-based Google employee, and nobody gives him a loan because he doesn't have a credit scoring because he just arrived to the US 7 months ago, for example. So yes, we're doing all over. It could be in the US, in Canada, the other places, of course.
That's really interesting because a lot of Canadians right now are moving to the US to escape many things, the cold and political situations, whatever. I mean, many reasons,
Yeah.
or just for employment. And
Or just
that
for
was
the
the
sun.
question. Yeah, just the sun, enjoy that, the wine, whatever it is. Work, family too. Like there's Americans that have moved to Canada and now they're migrating back home for various reasons, but they no longer have US credit because they've been gone 30 years. So I mean, they may have never worked in the US and things. So that's interesting so you guys kind of help build, I guess, US credit in a way, like.
So the loans that we issue at the moment, our main product is loans for a US entity. It could be an LLC, LP, whatever, against a US investment property. So the loans are not made to the person; they made to the entity. The next product that we're working on short-term rentals, which is for the Airbnbs that Canadians love, of course. And the next that is already in the pipeline. It will
they're all waiting. Excuse me.
Yeah, and another product that will go in the second or third quarter of 2022, we're now working on, is the second homes. So exactly those Canadians that are moving into Florida, moving into Arizona, they want to live in the sun and not in the snow, and they're looking for financing in the US. Those are the ones that are in the pipeline. We'll get there. We're working very hard, and we're actually recruiting. I will take advantage of this stage. We're recruiting worldwide in the US, in Canada, in the UK, in Australia, and Israel. So if you want to work with Lendai, so feel free to reach out.
Yeah, I need some help.
Ooh, this is interesting. Give me a call. So yeah, Mike Nicholson's been looking at many short-term rentals. So yes, this is amazing.
Mike, you're going to be the first one to know. If that's okay, I just want to touch and hold a little bit about the B2B model that we're working in. So Yair mentioned we're working in a B2B, business to business model where I'm coming in Canada as the boots on the ground. Earlier this year, we opened our Canadian branch, and I'm partnering up with anyone who touches and connecting between Canada and the US. So partners as yourself, Mike and Leanne are here in the audience, realtors, loan brokers, real estate entrepreneurs, CPAs, legal. There's so many that are partnering up with us and connecting us to their community, to their clientele. I think it's very important on the customer service level, and I haven't seen this yet before, where a U.S. private lender opening a branch, boots on the ground in a foreign country, coming within the community, creating the relationships, and more than that, creating the trust. I think in the private lending niche, there are so many things that can go wrong. You're investing across borders. Sometimes, as Yair mentioned, you're not even seeing your investment. Everything is over emails. And so we want to come in and say, okay, we're here for you, or I can say it, I'm here for the Canadians, to create the relationship, to create the trust, and to walk you through the loan process hand in hand. Any questions that's coming up, that's rising up, I'm right here to answer. I'm close. I'm in the same time zone. And I think it's really important in the communication and human level, right? We
Yeah,
all want to do business with. We want to do business with people we trust and people we know, we feel comfortable with. And in that niche of private lending, it's very hard to find.
Totally. And we have a question for you. So you're being spoiled. So thank you for your clarification. But my question is about a foreigner who is not in Canada, but who wants to invest remotely in the US, like a resident of the Middle East, like Dubai. So that's it. Where do you draw the line? I know you had certain countries.
Yes. So the main countries that we service today is Canada, of course, UK, Israel, Australia, well, it's Switzerland, Germany, Holland, all the Western countries. We're looking into, of course, Latin America. We're looking into more Middle East countries. We started from the Western countries with English-speaking countries. The data is in English. It's easier for our system to evaluate the data. But we're spending many millions of dollars to build a system to be operative in many more countries. So we'll get to we'll conquer the world, but we start with the Western world.
The Western and the strong economy, right? We want to work with the strong economy where it's safe for everybody on the borrower side and the lending side.
That sounds excellent. So cash on cash return. I'm excited to hear about this one.
Yeah, I promised you an example. So this is a very, very simple example. Of course, all the numbers are is clear and easy to understand. It works in real life. It simply will be less pretty numbers as far as it will be with a $100 and something $1,000, etc. So just for the sake of the simplicity, we're taking an example of a property that costs $100,000. The equity that we need to invest in it is, of course, $100,000. We have a potential loan of only 50% LTV, again, for the easy numbers, $50,000. And the interest rate in this case is 5% interest rate as interest only, again, for the easy numbers. The property NOI, the net operating income that's generated by this property is $10,000. So that's the numbers that we're playing with. So if we're looking on a cash-only transaction, we have $100,000, we invest $100,000, and the property makes $10,000. So it's an easy calculation. We're doing 10% cash-on-cash return. Great numbers. I wish everybody will do 10% cash-on-cash return.
That would be nice.
But if we're adding leverage into this transaction, so the purchase price stays the same, but the equity is only $50,000 because we bring $50,000 from the bank. The debt service, we need to pay for this money. It's not a free money. So with $2,500, we said 5% interest only. So the NOI decreases to $7,500. It's not the $10,000 as we was before. But actually, because our equity in the deal is not $100,000, it's only $50,000. So the cash-on-cash return is suddenly 15% cash-on-cash return. And this is the simplest example I can use to explain that when the debt service and the cost of the mortgage is less than the income of the property, you will get a higher cash-on-cash return when you're leveraging with US financing on your property. And this is a very important thing to understand. So you're not just using less money, you're actually making more money on every dollar that you spend.
And creating income tax deductible expenses as well, which I love. So you keep more money, you create more money, and you create this community as well. So like Michael said, like you're boots on the ground in Canada. So we're kind of building this team and we know who to call when we're buying more properties. And now 15% return. Wow, that's great.
So a few things that we want to set, because Lendai is, of course, as you can do, in the US, you will always find someone. But few tips that I want to share with the audience. how to choose the right lender for a foreign national. So first of all, this general thing regarding the US, always read the fine prints. There's a thing called in the US predatory lenders, which is lender, when we finance a property, all we want is the property to maintain the debt service. And that's it. We're a finance company. We're not a real estate company. I invest in real estate personally, but Lendai is not a real estate company. So all we want to do is to make sure that the property can maintain the debt service. But there are some kinds of lenders in the US called predatory lenders that their business is actually real estate. So they will give you a loan, but in the fine prints, you will see that if something happened with the loan, you will get 60% interest rate, or they will try to make you basically to default on your loan so they can foreclose the loan. So they give you 60% LTV, for example, and they help you create a default on the loan, which means that now they can take this property from you and they own the property for 60% of its value. So it's a very bad practice. There are more and more laws limiting it in the US, but be smart, read the fine prints, understand who you're working with, check about him, check online, see what's the reviews. You can go to Bigger Pocket, you can go to Trustpilot. There's so many ways to check online reviews on every service provider. So do the check before you start to invest. Another thing, as we saw some clients that were hit by this, never pay anything to the lender before the closing. The only thing that you can pay before, and you should pay, of course, because somebody is actually doing the work, is the appraisal cost, because the appraiser actually need to go to the property and give the appraisal report. But don't pay anything other than the appraisal in front. We saw some lenders. We had a client that came to us because he was trying to get a loan from a lender, and the lender promised him a great loan, took $2,500 from him, and suddenly things went wrong. It took too much time. It was a great property. It was a 3-property portfolio, and he wanted to move his loan to us because he knows that we can close very fast. But then I said, no, those $2,500 are non-refundable. And they didn't even give him a loan. So he was stuck, and eventually did the loan with the same lender, even though it almost cost him the deal because it took too long, etc., because he paid too much upfront. So don't pay anything except the appraisal upfront. And the third thing is, when working with a US lender, because there's so many types of lenders in the US, make sure that the lenders knows how to work with foreign nationals. If it's a Canadian from Ontario, it's easy because it's English. But if you're coming from Germany, make sure that he knows how to read documents in German, or Israeli in Hebrew, etc. Make sure that you're not the first client that comes to his door that is a foreign client, and they say, okay, there's a nice opportunity, let's try to do that. Because then he can and try to do that, and eventually find out that, for example, we saw it with our Australian clients. Australian has a different tax structure. So they have an Australian trust that holds a US LLC. And a lot of US lenders try to understand how does the Australian trust works, but it's too far-fetched for them. So they start the process, and then they can't even go on with the loan. So make sure that the lender that you're working with already has a few loans for investors, and this is part of his business. Of course, with us, this is our only things that we're doing. We're not doing Americans, and on top of that, some foreign nationals. This is Lendai business 100%. A few tips that I want to share, and we will almost end here, is, and I will do it in general, I don't want to go into everything, but if you want to get US financing on your properties, work like a pro and be organized. This, if I will sum it in a way. Make sure that you have all the documentation. You rented the property. Put a folder in your computer. You have the deed there. You have the rent agreement. You have the monthly rent rolls. Be organized. It will save you a lot of time and hassle during the process. And I won't go into all the different tips because we're already exceeding our time. But as you will be more organized, the process will be much faster. And Michal can tell you, she is working with many of our clients, and she sees when somebody's coming organized, you can close everything within a 20-minute.
I like it fast and efficient. Come organize. If not, I'm gonna help you, and we're gonna organize your documents together. But when you're coming organized, you're uploading your documents, whatever is being asked, everything will happen fast. And we all want it fast, and more than it's more than what we want. It's the market. The market is crazy right now. If we're going to delay on it, there's no property anymore. Someone that's close to it will come and grab it right under your nose. So it's a very good tip to put all your structure, all your documentation together. We're going to help you and guide you and show you where to upload it. So we're all going to close the deal and move to the next one.
Yeah, and this is why I like when people come to a pre-approval before they start the process. So they already see the system. They have a meeting with our customer success managers. They understand exactly how the process goes. So we can help them understand, okay, once you will find the property, this is documentation that we will need to see on the property. We already have your documentation. So it's saves a lot of time, and you can be more competitive with your offer because we can close faster because you know in advance what you need to do.
We have a question from the audience. Yeah, is every property subject to an appraisal as part of the loan process?
Yes. So as part of the guidelines of Lendai and the market, we have to see a valid appraisal as part of the process. But the way that we structure the process is we order the appraisal very early during the process after you get the pre-approval, and then we basically do everything simultaneously. We're not waiting for the appraisal to start working on documents, start working on the title. We're doing everything at the same time. So once the appraisal is back, everything else is already ready, and we can be ready to close within sometimes even 24 hours after the appraisal gets back to us.
Yeah, and it's amazing the speed, like going back to the very beginning, when you guys shared about the pre-approval letter, I was stunned. I'm like, I clicked a few things. I'm like, what? This is insane. What's going on? Is my computer being, I don't know, hacked or something? And then you get this letter, and then of course you need to keep going, but it's insane. In Canada, to get an answer could be days, weeks, who knows? So yeah, it's very, very efficient if you are organized. Just like Michal said, very wise advice. So that's been excellent. Thank you so much. Do you mind sharing maybe a bit your website, how it works, or show us the platform if you don't mind, or the client journey? There you go, the 5 steps.
Yeah, we can talk about the client journey. The platform, we can do a separate meeting on them on the platform. But basically, as Michal said before, everything starts with a partner referral. So every one of each and one of our partners have his own designated landing page, is has his own platform where with a click of a button, he can connect whoever is coming to work with him to Lendai loan. The borrower.
Quick note, Yair, sorry. We're not, we don't want to step on our partner's toes. And so that's the only way to reach us. So whoever is in the audience, you can reach us through François and his link to
or Mike and Leanne, I'm open to sharing.
to start a loan application. And that's how it works with all of our partners. The way to reach us is through our partners.
Exactly. Once the partner opens the application, then you get an email and you do an instant pre-approval. We ask a few questions about yourself, ask a few questions about the property if you already have a property, because a pre-approval is not just for yourself. If you already have, it's a cash out refi, we give you a full pre-approval on the specific property and the specific deal, not just something in the air. You'll see the exact numbers that you can lend. Once we start that, the next phase is an online application. You schedule a meeting with one of our customer representatives. You upload during the meeting. You can ask any question that you want. You upload all the relevant information. We order the appraisal. The system actually is ordering the appraisal automatically. And once we have all the information from you, from the title, from the appraisal, we're finalizing the underwriting and we're scheduling a closing. The closing itself is also an online closing. So you don't need to, all you need to have to work with Lendai is a computer and an internet connection. You can sit in your home in Toronto or in Montreal and close on a $500,000 loan in Ohio with the comfort of your own office. And once it's closed, it's financed by us in the US, of course. So from end to end, the process takes between 10 to 30 days. Of course, again, as more organized as you are, it will take less. If you need to start searching for the documents, it sometimes takes more. We only promise one thing. We will always be the first one to be ready as long as the property, of course, is in a good condition, the title is clean, and the borrower is cooperative. Lendai will be ready to close before everybody else. So that's our promise, and I'm happy to say that.
And the tenant doesn't have COVID.
And
that's it.
Yeah. And the client total time in the process. So the pre-approval is 3 to 5 minutes. The online application takes between 30 to 45 minutes just to understand the process, upload the information. And the closing takes, again, 30 to 45 minutes of the signing of the documents. So within 90 minutes, you get a loan on your US portfolio or properties from the comfort of your own home. So if you want to take a loan on your Montreal property, just going down the stairs, going to your car, searching a parking by your bank will take you longer than closing a loan with Lendai. And this is basically what our technology is enabling us to do.
Yeah, and it's amazing. That's something I have to tell people about as well, the e-closing, because in the States, it's not very common. So I recently closed. Unfortunately, I had a process already begun, and a lot of lenders want wet signatures. So now you're paying for a lawyer in Canada to witness you signing documents that are then shipped to the US, and it becomes very difficult.
I would love to expand a little bit about that. I think the e-closing is the best and the most fun part of the job, at least mine as a witness, as Lendai representative. Actually, I can tell that last week I had 2 closings almost at the same time, and I felt like I opened 2 computers. I felt like a DJ on closing, maneuvering between the 2, and it's so comfortable, so easy. There is a RON, remote online notary, that allowing us to invite the notary and notarize all the e-signatures online. The only 2 states that are not accepting RON, the RON, remote online notary, at the moment is Alabama and Georgia. Hopefully they're gonna eventually step up their game and go into civilization and allow us to close remotely. But other than that, if you're investing in any other state, then it's a pleasure. Really, it's a great experience.
Yeah, and we have some great comments from Mike, who also went through your process. So he mentioned the appraisal process is similar to the process in Canada, which is true. We always get appraisals unless it's like a promissory note, but that's a very different story. And then, notary, online notary is very convenient. Yes. The other way is not fun. You have to find a Canadian lawyer that understands a US mortgage, and a lot of them say, no, I don't get it. I don't want to be involved. And
as part of our full service solution, even in Georgia or Alabama, we always try to help. So even if we just did now a closing in Sydney, Australia, for a loan in Georgia. So of course, Murphy rules, it will be specifically in Georgia. So we went out and we found a notary in Sydney, Australia, that knows how to underwrite, and we went with him on a meeting to explain to him exactly what to do in the meeting. The borrower went to the specific notary. He sent all the documents. So even if we need to do those things, because Georgia and Alabama are slightly different, we will help you find the solutions to make sure that you will need to work as minimally as you can.
And not only he notarized the documents, he also needed to apostille them, which means in Canada legalization, and that too was it was just done at the same day. So it all depends on who do you find, who are your trusted professionals you work with, and this is another part of our due diligence. We just have the communications all around the world, whatever country we support, and the states that we're supporting. We have the community, we have the professionals to get it done as fast, as simple as we know how to provide it.
Exactly.
That's amazing. Can't ask for much better. Great rates, easy process, comfort of your home, and great service with a smile. So I love it. Thank you so much. Wow, that was amazing. I don't know if you have any other questions from the audience before we let you go, but thank you so much.
Thank you so much for having us. We enjoyed another fun day at work.
Yeah, there you go. My pleasure. So I think that's it. Oh, who is your referral partner in Canada? There you go. Who is your partner in Canada?
We have hundreds of referral partners worldwide. So François is one of them. Mike and Jan is one of them. And we have partners in Australia, Singapore, Israel, Europe.
Oh, we have many. and you can contact any one of them. Thank you for great information. Thank you, our great audience, for joining us and taking the time during your Thursday evening to hear about real estate, to hear about U.S. mortgages. We'll be happy to share more and more information and keep you posted. I know many of you are waiting for short-term rentals, second homes, and it's all coming. It's being polished now, and we're gonna make it great for you guys. Stay tuned.
Yeah, Lendai is here for you.
Excellent. Thank you so much. Take care, everyone. Have a great evening and start investing in the US. So that's it. Cheers.